It is good to be back this year. This is one of the most important meetings, in my opinion, that you're going to do all year long. I worked with the soybean industry for 30 years, and my focus is international. So I'm always looking at how do we compete in the global market when we're competing against some really tough players, not only Brazil, Argentina, Paraguay, Uruguay, and to a certain extent India, but we're also competing against canola production, we're competing against sunflower production. We're in a global market, and what we're trying to do is to get rid of our crop, move it at the best possible price in a way that makes our industry more competitive over time. Fortunately, we've had the last 3 or 4 years a circumstance where demand has really been strong. Our prices have been great, and it's probably the best time in agriculture in my lifetime that we've seen. But you know, we can always do it better, and one of the key things that we have to do is to make sure that as an industry as a whole and as individual producers that you're producing as efficiently as possible, but also maximizing your yields to get the greatest return on your land and to increase your profits. This one is this graph I like to show, which tells you a lot about what's happening in the world. It's the percentage change in global consumption of soybeans, wheat, corn, cotton, and rice since 1990. The top, you'll see that soybean demand is up 150% during that period. Now that's happened not because of government policy, but because of economic growth in the world. We've got people, particularly in China and throughout Asia, are getting more money in their pocket because their economies are growing. As a result, they want to improve the quality of their diet. One of the first things they do is put more veg oil in their diet. They want more animal protein in their diet, whether it be pork, poultry meat, farm-raised fish, or whatever. They want to improve the quality of their diet. So that's why we've seen such a growth in soybean demand. Is primarily because of demand for soybean meal for animal feed. If you look at corn, it's up about 84%, but most of that consumption growth on a global basis has occurred because of the U.S. ethanol policy. That's where we've seen the growth, is there. It's not really occurred so much in the rest of the world for energy, but it's because in a lot of cases when you put in soybean meal into a feed ration, if you're a developing country and you learn how to do it better, you take out grain and you put in soybean meal. So it grows much slower. And then you look down there at the bottom, which are the staple commodities in terms of rice and wheat, have grown very little. Cotton has gone all over the place because if you're all of a sudden got some tough times economically, you just don't buy any shirts or you don't buy any pants. You wear the ones you've had, so demand goes down. But its soybeans have consistently gone up over that period. And so the question is, and I think that's the key, is why, you know, many of you say if we increase our yields, won't that increase the supply and drive down the price? Well, that assumes that we're not going to continue to see strong growth. And I think we are going to continue to see strong growth. This is global soybean production and consumption, and you can see the balance that's occurred since 2000, that we're consuming what we're producing. And in fact, I would argue that in most cases, the biggest limiting factor to consumption has been a lack of supply. We've been able to grow substantially over a period. This is the annual growth in soybean consumption. You can say we've had 2 years when the demand fell. One was in 2003-04 because we had a bad crop, and the other one was in 2008-09 because Argentina had a very bad crop. In both those years, we simply did not have a supply to meet global demand. But in both years, we came back the next year with very high growth in demand. This year, we're projecting about 6.4 million tons of growth. If the price was lower, I think it'd be 10, 11 million tons, maybe more. It's a matter of what the world can afford. But the key there is that even in this period when we've had very high prices, bad economic circumstances around the world, particularly in the U.S. and Europe, that we're seeing continued growth in demand. I wouldn't have expected that 2 or 3 years ago, but we are seeing it because we've got money out there and people wanting to improve the quality of their diets. This is soybean production in the U.S., Argentina, Brazil, and China. You can see that the U.S. and Brazil now are essentially the same in terms of the size of their production. Looks like Brazil's going to produce about 82 million tons. That's what we produced last year, is about 82 million tons. Argentina has been very variable because of weather, and looks like it's going to, USDA is saying it's going to produce about 63 million tons this year. I think it's probably not going to be above 58. Somewhere instead of 53 million tons, it's probably going to be around 48, 47 because they've had a lot of dry weather. Brazil is set to produce a record crop, there's no question about it, but they are suffering a lot of problems in certain areas in Mato Grosso where it was so wet that the soybeans started sprouting in the pods on the plants before they could get them out of the field. But that's hurting quality, but they are getting the crop out. The biggest problem now is getting it to the coast. It's about 1,200 miles to the coast, and the soybean transportation costs this year are up 80% over a year ago because they changed the rules to where the truckers can't drive more than 8 hours without a rest, and now they're having to put 2 drivers in their trucks. Roads are bad, a lot of problems, but they're getting the crop to the coast. It's costing them about $3 a bushel to do it, but they're doing it. And right now there's 135 ships as of Friday waiting to load soybeans. They've got a 9 million ton backup to load soybeans in the coast. They've slowed, the line is not too bad yet at Paranaguá. It was only 21 miles long yesterday to dump. I've said before that a lot of people benefit from that one, but it's not the trucker and not the farmer. This is global soybean production by country. You can see that if you want soybeans in the world, there's only really 3 places to go get it of any quantity. The United States, Argentina, and Brazil. We're the 3 dominant producers in the world. You can go get some out of Paraguay, a little out of Uruguay. Canada's got a little for export, but not China. It's the world's largest importer by far. So if you want quantity, you have to go to the Argentina, Brazil, or the United States. That's where the growth is. This is U.S. soybean production. You can see, I put these in million metric tons, and maybe you wonder why not in bushels. It's because we are in a global market, and we don't sell soybeans overseas in bushels. We sell them in 55,000 ton lots on Panamax vessels. So we need to start thinking about what does a customer think, and that's in million metric tons. So you can see that we're producing last year 82 million tons of soybeans. I think that was actually miraculous considering the weather we had. I talked to people who said back in July or August last year, oh, if I make 30 bushels of beans this year, I'll be lucky. And then we got the late rains, and the same farmer calls up and says, well, I got 65. So it was really a miracle that we got late rains last year to produce as big a crop as we did. But we're still almost 10 million tons below our record back in 2009. And I think that this year we've got the potential to set a new record. I personally think we're going to see soybean acreage up 1 or 2 million acres over a year ago. And I think that if you have weather that cooperates, and if farmers pay attention to what they're doing in producing soybeans, we could easily have a record of exceeding 92 million tons of soybeans this year. Unfortunately, or the reality is that no matter how much we produce, our share of the global market is going down. We were at a high of about 42%, and now this year we're projecting to be down around 30%. Simply not because we're producing less, it's because the rest of the world's producing more. We run out of land. We either have to take something out of conservation reserve, plow up pasture, or take something out of another crop to expand soybean production. Hence why it's important to focus on yields. The good thing is, this is the value of the U.S. soybean crop. Who would have thought back in 2001, when we sold the crop for $12.6 billion, that a decade later we'd be selling it for $43 billion. But that's what's occurred, not only because we've maintained production, but because the price has gone so much higher. And that's why agriculture is financially in better shape today than probably it's been in my lifetime. We're in great shape, but also with the value of the crop that much, it also increases the incentive for you as farmers to say, how can I change what I do producing this crop in terms of varieties, fertilizers, chemicals, whatever, to maximize my yield, because I can afford to spend money to grow additional $12 soybeans. And hence why you're at this meeting. It's really important that we do that, because as the previous speaker said, odds are we're not going to have these prices for a long time. We're going to go back into a period where margins are much lower. And at that point, yields are essential to maintain your profitability. This is U.S. harvested area. And you can see there that we had a high of 76.6 million acres harvested. Last year it was 76 million acres. I think you could probably see that go up to 77. Some people say 78 million acres this year, simply because we're going to have a lot of reasons why farmers may plant more soybeans this year. They had a better yield experience last year than they did with corn. A lot of farmers thinking they need to go back to improve their rotations, because maybe they saw a lot of hit on their yields in the last couple of years on corn after corn. And maybe it's risk minimization. It just costs less to grow soybeans. So a lot of factors coming together. That's why I think we may surprise here in May, and when we see the numbers in May and June that showed we planted more soybeans than people thought. This is corn and soybean planted area. You can see in the blue there that we've really expanded our corn acreage, but we haven't expanded soybean acreage. And I call that the ethanol effect. When you've put as much into incentives to produce corn to supply the ethanol industry, we've made corn a more profitable crop for many farmers, and doing so increased the acreage of corn to supply the 4 billion plus bushels that we're using to going into the ethanol industry. Soybeans are doing quite well when you consider that they didn't have that. Yes, we have a biodiesel industry, but biodiesel is to a large extent using up the surplus soybean oil that we've had. It's not causing people to grow soybeans. We don't grow soybeans for oil, we grow them for meal. So soybeans have held on pretty well considering all the incentives that have been put into growing corn. This is Illinois' plantings of corn and soybeans. You can see the same factor here. You've trended down in soybeans, up in corn. And you know, the question, is that going to continue? Are we getting farmers getting a little bit out of line in their rotations? Are they seeing the effects of that? I can't, it's each individual farmer's circumstances will answer that question. But clearly we have had the incentives here to expand corn. Here's Argentina and Brazil's harvested area. I think it's important here to look and notice that beginning in about 2006, Brazil's planted area or harvested area of soybeans went down. Now, how could that happen? Well, it simply wasn't profitable. So the question was asked, will that land sit idle? To a certain extent, it will. They'll either graze it for a year, they may put it in another crop, or when they look at the bottom line and said, it's just not worth it me investing the money in it this year, I'm going to wait a year or two till prices improve. And that wasn't necessarily just global prices that were the problem. It was also how much did it cost to transport that crop to the port. At some points there, we've seen half the value of soybeans eaten up, in the case of Brazil, getting the soybeans to the port. And they have much higher cost to bring in, whether it be lime, fertilizers, chemicals, and everything from the coastal areas back to the internal areas of the country. So they did see a decline in soybean harvested area. But beginning back in 2010, it began to shoot up, and this year it was up over 10% in plantings, because they could lock in a good price. And they could very confident that they were going to be able to make a profit. Argentina has grew very fast during the 90s, but now it's slowed down. And I don't see that they can continue to expand production as fast in the future, because they're running out of land, and they're already planting twice as many soybeans as all other field crops combined. So they're going to get into big problems with diseases, with insects, other problems, and the farmers there know they need to improve their rotations. And they would be doing it today by planting more corn. But the government of Argentina, which is probably the worst government I can think of in the world in terms of the way it treats agriculture, is always keeping those farmers fearful that the government will keep them from exporting corn and keep the price domestically low. So the only thing they know that they can count on, that the government won't interfere with exports, is to plant soybeans. Now, the farmers have to pay a 35% export tax to move those soybeans out, so the best they're ever going to get of the price is 65% of the world price. And right now, the government's upset because the farmers are saying, I don't want to sell soybeans because you've given me the rate you're going to pay me in terms of pesos versus the dollar is 30% below the black market rate. Second, you got a 30% inflation rate. So I'm only get about 20% after you net it out of what the world price is. So I'm going to sit on the beans, and to me, they're like gold. They're like better than cash. Now the government's all upset, and they're trying to find a way to force the farmers to sell their beans so that they can collect the tax revenue and keep them from going bankrupt. And the farmers are saying, we're not going to do it. So that's a really interesting thing going on now. You know, about the rule of thumb is that about every 12 years Argentina goes bankrupt, and that's going to occur this year. It's just a given. They are, as I said, the most incompetent government in the world in terms of managing their agriculture. This is global soybean meal consumption. The key here is to notice that it continued to grow in the midst of very high prices and very short supplies. We are continuing to see a growth in demand. And that's being driven mainly by Asian markets, but also some in Latin America, some in the Middle East. And we're going to continue to see that growth as long as we don't see a major global recession or we see political insurrection in some key markets in Asia. This is global soybean meal consumption by region. You can see now the biggest consuming area in the world now is East Asia, which is China, Korea, Taiwan, Japan. The second largest is North America, which is US, Canada, and Mexico, then the European Union. But we're seeing growth also in Southeast Asia, South America, particularly in Brazil and Argentina, and other regions of the world. But it's that Asian market that is where we're seeing such growth. This is the one that you need to look at. This is soybean imports by China in the blue and the rest of the world in the red. China's going to import 63 million tons of soybeans this year. That's about 65% of all the soybeans exported by all exporters are going to go to China. In doing so, they have been willing to pay a price that was sufficient to drive down soybean imports by the rest of the world. European soybean crush has gone down because they reduced their soybean imports. Japan's imports have gone down. Korea's imports have gone down. Most countries in the world have seen their imports of soybeans go down. We've seen our soybean crush go down because China was very aggressive competing for the beans and made even our crushers not able to compete in the global markets at times because China was paying so much for beans. And again, I don't see that that's slowing down. If you look at China's soybean imports since 2000, and you say if they continue at that pace, what will be their imports in 10 years? And it's over 100 million tons. USDA, in fact, said in their long-range plan that it'll be 104 million tons of soybean imports versus 63 today. Now, 104 million tons of soybeans, don't forget, if we have a record crop in the U.S., we'll produce 92 million tons. They're going to import 100 million tons in 10 years. That's how much growth we see in the global markets for demand for soybeans. This is the world's largest soybean meal consumers. You'll see China, don't forget in 1995, 96, 17 years ago, China was a net exporter of soybeans. Now they're importing 65% of the world's exports of soybeans. You can see that in soybean meal, they blew past the United States and Europe to become by far the largest soybean meal consumer. Europe is second. The U.S. is third. We've lost about 4 million tons of soybean meal business in the U.S. Since 2006, mainly because of distillers' dried grain from our ethanol plants have moved into the swine and poultry rations and dairy rations and beef cattle rations and displaced soybean meal. So we've lost about $1 billion, about $2 billion worth of domestic demand for soybean meal in the last 5 years because of ethanol. So there is an offset to ethanol, and it's mainly from DDG impact. If this is the soybean meal consumption in China from 1971 up until the estimate for the current year, you can see up until 1990, nothing, no growth, flat. Then they had this little problem called Tiananmen Square. They had the whole government of China recognized that they could have a revolution and they would all be in trouble. So they made the decision to liberalize the economy, allow foreign investment, to allow private entrepreneurship to occur. Since then, all this investment and economic growth has occurred in China, and you can see how much directly that relates into the use of soybean meal producing animal feed. The interesting thing is it doesn't seem to be really slowing down, and that's a little troubling to me. If I've got one major overriding worry about global demand in the future, it's China. China's got all different kinds of ethnic groups in that country. They have groups that don't like each other. They've got, whether you go up into Heilongjiang province and what the Japanese call Manchuria, they really don't want to be controlled by the Han Chinese down in Beijing. The ethnic groups out west of the country that borders Kazakhstan are mainly Muslim. They want out. The Tibetans want out. If you go down to southern China, around Guangzhou, Hong Kong, where they spoke Cantonese rather than Mandarin, they want out. There's over 200,000 political protests in China last year by most estimates. The people fed up with the government, they're fed up with corruption. The more money people get, the more they want transparency in government, they want corruption stopped. And I think that the right trigger could cause China to really get into a major internal political fight. Will that occur? I don't know. Will the Chinese generals want to try their new toys out and then try to invade Taiwan, or will they take on the Philippines and in some of those new islands out there in the middle of the South China Sea? Will they push their extraterritorial objectives by trying to take over and control more of the resources of the South China Sea, which would probably open up a global conflict? I don't know. It's got to be managed very carefully, not only by the Chinese civilian leadership, but by the relationship of the United States, Western Europe, and others relative to China. But it is going to be an issue because China's biggest challenge in the future is natural resources. How do they deal with feeding an increasingly prosperous 1.3 billion people who also want at the same time political reform? They want openness in government, and they want to stop to corruption. So that's going to be a major challenge for politics. This is China's vegetable oil consumption and imports. China is now the largest importer of vegetable oil, as well as the largest importer of soybeans. I think they're going to see a really big growth in China's imports of canola seed from Canada in the next 2 or 3 years. And that's going to put real pressure on canola crushers in Japan, Mexico, and even Canada. Here's the next comer, in my opinion. This is India's consumption of exports and consumption of soybean meal. You can see export have been a problem for us because they export their soybean meal in the October through April time period when we're most competitive. And they're exporting 4 million tons, mainly going into Southeast Asia, Japan, and Korea. So the soybean industry has been there for now 20 years, investing in trying to do reverse marketing, trying to increase soybean meal consumption in India. And you'll see now that that's beginning to pay real dividends, in that the soybean meal consumption is going up pretty fast because the Indian people have got more money in their pockets, and they are finding out that even those Hindus that aren't supposed to eat meat do like chicken. And so they're growing their consumption of chicken by about 10 or 15% per year. And we're seeing that continue. If that trend continues, you're going to see that in 10 years, India is going to be consuming about 8.1 or 8.2 million tons of soybean meal, which means they won't be exporting any. They'll be a net importer of soybeans at that point. That will change the market opportunities for us. But personally, I think it will grow faster than that. The reason I think it will grow faster than that is because you're allowing Walmart and those type of people come in now to put in their stores, to put in the cold chains, to start selling poultry parts. And when you get parts, the poor people that are going to be able to grow at a faster, grow consumption at a faster rate. This is India's veg oil income, consumption and imports, continuing to grow very rapidly. Global soybean oil consumption is continuing to grow despite what we saw with the high prices that are out there today. This is the global consumption of soybean oil. The red is what we're using for industrial products worldwide, like for biodiesel. The blue is in for food, so most of the fastest growth has been in biodiesel. I think that may slow down for a lot of reasons. Barriers to trade in Europe, some other factors. But again, it is continuing to grow and it's using up our surplus of soybean oil. Our vegetable oil stocks to use ratio is flat, maybe a little growing, but that's telling us that we're managing our stocks and oils are not a burden to the global stocks to soybean industry. This is global soybean consumption. If you look out toward 2012, if we continue to grow at the same rate we're growing in the last decade, we're going to need another 70 million tons of soybeans to meet the world's needs. Now, that's more than Brazil produced last year. So we're going to have to add a Brazil in the next decade to meet global demand if those trends continue. And I see no reason that they're not going to continue, short of, like I said, major global economic problems or a major political problem in some place like China. Let's talk about yields. We are seeing growth in yields. You can see from this we've had only 3 years out of since 1984 that we've had yields well below the trend line. And that was in 88, 2003, and again in 2012. But our yields are continuing to grow. And that's the average national yield. And it's important to note that during that period, we've added a lot of production of soybeans up in places like North Dakota, South Dakota, northern Minnesota, areas that don't yield as much historically. So we're growing the national average even when we were adding areas with a lower average. But we can do better. You had Kip Cullers here last year who spoke about that he was growing 160 bushel beans. We know what the potential is, but what is the reality? What are farmers doing? I grew up in Texas when I know the South, and I can tell you that in Mississippi and that part of the world, farmers focus on cotton. What can I do to maximize my cotton yields? Here in the Midwest, corn. That's always been the focus. Beans have been sort of the stepchild crop. But it changes a lot when you got $12 soybeans. And all of a sudden you know that if you can do something and add 5, 8 bushels a year, a yield to your soybeans, that's a lot of money. And now we're at that point. And I'm also at the belief that we're going to see better yield growth in soybeans in the future than we were going to see in corn. And the reason for it was because from the 40s on, when we had hybrid corn, every seed company knew you had to buy their seed every year. So they could invest the money it took to grow, to put it into the research to get the higher yielding varieties. And that's where the money went. The major seed companies also sold soybean seed, but that was more of a hook to get you to buy their corn seed because they weren't making that much money on soybeans. But since '96, with Roundup Ready and the biotech soybeans, you have to buy the seed every year. And so since then, the profitability in producing soybean seed has gone way up, and so has the research and development investments in the soybeans. And now we're beginning to get the returns off of that investment. And I think for that reason, we're going to see the potential in terms of the yield potential of the varieties that you're buying be greater in the future. Now, what will you do to maximize those yields is what a key that you're going to be talking about here today. If you look at, you may find this hard to believe, but if you look over the last decade and you take the the corn yield, in the average in the United States, and you divide it by the average soybean yield, you're going to find that actually soybean yields have grown faster in the last decade than they have for corn. A bit of a surprise, because that's not what most of you might think. Now, you may grow more bushels per acre growth, but the ratio is in fact flavored soybeans. And if you look at Illinois, it's even more pronounced that soybean yields have grown faster than corn yields. That says to me that you've got a lot of potential to continue to expand soybean yields in the state. And if you look at what the potential demand is going to be in the future, we're going to have a market for you to produce it. Think about one thing, that what you do as a producer to maximize your yields, and what we do as an industry as a whole to maximize our yields by using the technology we've got today, is the one thing you can do that doesn't, in terms of yield expansion, that doesn't help your competitor. If we develop new seed varieties, new chemicals, whatever, today, they're spread around the world within a year or two. So everybody, in Brazil, Argentina, the United States, they all benefit from that new technology. But your management, what you do, doesn't help them. It helps you. And that's what we have to do as an industry, maximize our competitiveness in a global market, because times are not going to be as good in the future, most likely, as they have been in the last few years. And I guess my message I'd leave you with is, grow them efficiently, but don't worry about a demand for them in the future. The demand's going to be there. The question is, well, you're going to be able to be the one that supplies it, or is it going to be supplied by South America? With that, I'll stop. Thank you very much.